Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Global markets really been shaken by the events in Turkey. Turkey was already on a little bit of sort of shaky ground, and then President Trump came in and sort of issued sort of fresh tariffs against Turkey. That sent the currency down aggressively. You've then got a pretty sort of stubborn president there, Erdogan, who's come out and said, he's not going to have any deal with the IMF. He's going to handle things this way. The central bank didn't come in and step in and sort of increase rates to defend the currency as probably they should have straight away. And the currency really fell pretty dramatically. Now, on the back of that, the central bank has now come in and sort of provided a little bit of liquidity for the Turkish lira, and that has sort of helped sort of stem the flow, but only really it's only really a temporary fix. It's pretty much like a band-aid over a dam. It's not going to stop it long term. Really need some pretty major structural changes, and also a really change of mentality as well. Erdogan's come out and said now that Turkey will look to boycott US products. Obviously he sort of highlights iPhones, pretty sort of commonplace in Turkey, and that's all very well. But again, if you already bought an iPhone, the damage has already been done. It's not going to change. Okay, fresh purchases going forward, you can put tariffs on and import duties, etc., etc. But really, it's not going to impact the US greatly. And you look at the size of the economies, the US economy compared with the Turkish economy, clearly there's only going to be one winner there. Maybe a more sort of pressing concern is the fact that a lot of the Turkish debt is borrowed in foreign currencies. So you owe a foreign currency, but your assets are based in Turkish lira. So you've got a depreciating lira, which is obviously making your assets cheaper, and your debts and liabilities are getting more expensive because your currency is getting weaker, and obviously the foreign currency is getting stronger. And that's maybe a bit of an issue, and potentially where the IMF possibly could come in and sort of help and sort of try and ease the pain. But really, you need the two sides to be able to talk first. And Erdogan has sort of said that he's not going to do any deal with the IMF. So really, you do need a major sort of shift in the Turkish sort of mentality and thought process before, potentially you can sort of sit down and try and resolve these issues. Another week, another sort of scandal in the US concerning President Trump. He's now sort of taken to its ex-White House employee, Omarosa, who was also one of the candidates on his TV reality show. He's now fired her. She's come out with a book with some pretty interesting allegations and instances of issues around the White House and sort of Trump's behaviour. Potentially sort of racist comments, etc. But supposedly Trump isn't too worried about it. Although he came out with a sort of tweet rampage and rant of 8 tweets in 24 hours to sort of try and defend his behaviour and try and sort of diss Omarosa even more. You would have thought if he wasn't too worried about it, he would have just left it, and the story would pretty quickly die its own natural death by sort of tweeting and retweeting, etc. That just keeps the story in the headlines, potentially gives her more sort of fuel and more sort of pressure on him. He also launched a fresh tirade against the FBI, Counsel Mueller, and Jeff Sessions regarding the Russian probe. And again, it's just going to be interesting to see how that sort of plans through. That's starting to get down towards the sort of business end of proceedings now, and maybe Trump is just starting to feel a little bit of the heat. And all this is obviously we head into sort of midterms in November. Again, at present, the Republicans are struggling a little bit out there. And it's interesting, some of the candidates that, Trump is now endorsing on the Republican side, are potentially trying to sort of diplomatically sort of remove themselves from that sort of camp. And it's just going to be very interesting to see how that does sort of play through, and indeed whether it does hurt their chances in the midterms. Most of the earnings are through now, though, on the US, and it's a pretty good reporting season. GDP was pretty good, over 4%. Unemployment's still pretty low, and at the moment we're still on track for a Fed rate increase in September. So the one sort of question mark on that, could be potential global sort of market turmoil if this, Turkey situation does sort of increase in intensity. Potentially that might just delay the US rate hike. No real fresh news on Brexit, but then with sort of most of Europe on holiday in August, there wasn't really expected to be much sort of news. But then, if you look at it, by the time they get back September, it's getting pretty close to the wire to be able to get something sorted out, ratified by the Parliament, to be put in place by March 2019. Oil's come off a little bit, though potentially it might come under a little bit of pressure with this sort of Turkish situation. But currently around that sort of $67 a barrel, and sort of hovering really between that and sort of 70, and just sort of plateauing around those sort of levels. Here in New Zealand, quite interesting comments coming out from the Reserve Bank at the meeting last week. Rates were obviously left unchanged, there was no surprise there. But what really did take the market by surprise was the sort of commentary that came out, and potentially looking at sort of pushing back the first sort of rate hike to sort of late 2020. Most analysts, economists were looking at sort of 2019, but that seems to be pushed back now by around sort of 12 months to sort of late 2020. That's a pretty long time to have rates at 1.75. Also interesting as well, they sort of take on the sort of inflation target. Under the previous Reserve Bank governor and regime, they were looking at sort of trying to target that sort of mid-range of 2%, whereas now it would appear under the new governor, looking potentially at sort of overshooting that sort of 2%, and quite happy to sort of see it edge up towards the sort of upper end of the band, which is obviously that band 1 to 3%. That obviously has some pretty major implications out there for fixed interest. Also, obviously, term deposits, if rates aren't going to be increasing in the next sort of 12 to 18 months, then potentially there's no real sort of driving force to push rates up. And that probably keeps, certainly fixed interest on a reasonably sort of level keel. With potentially sort of new issues coming to market, still with that sort of 5 to 7 years, and looking around that sort of 4% fixed for that sort of 7 years. Whereas you compare that with some of the dividend yields out there, sort of 6-7% on some of these shares, even a little bit higher on some of the sort of higher dividend shares. There are some pretty interesting options out there for income. And if you're looking at discussing what is available, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. And we look forward to speaking to you soon.